let's now get more insight into the story behind these numbers. We are joined by I&M Bank's Regional Director, Chris Lowe. He joins us in the United Kingdom. Great to have you with us today, Mr. Lowe. Now, it certainly looks like the sector is slowly getting back on track after quite a tough year in 2020. We saw after-tax profit up 33%, non-performing loans down 8% in those half-year financial results. How did the bank weather the storm? What are the key drivers that led to these numbers?
Thank you and good evening. It's great to be here with you. Let me start by saying a lot of focus across the region has gone into working with our clients, particularly in the stress sectors, hospitality and tourism. We all know has been particularly hard hit. And it's been a willingness on both parties to work together on restructuring, looking at pricing, and seeing where we can support them. That to me has been a critical ingredient to why we're coming out of the current impact of pandemic in a strong way. Further to that, as a group across our footprint in East Africa, we've focused on ensuring we've got good liquidity. Good liquidity then enables us to pass on better pricing to our clients because our cost of funds are less. And obviously we've had to maintain robust capital during that period. We've also invested quite heavily during the period. So on one side, we're putting money into digitization of our services, solutions and distribution capability, while on the other side, we've cut back on unnecessary expenditure to keep overall costs down. We've also had, as you've already mentioned, the benefit of Uganda coming on board. We can talk about that. And Mauritius also turned the corner after a very difficult year last year on account of some lending that went bad. So those factors have all come together to enable us to achieve the 33% increase in post-tax profits. And from an NPA perspective, we've also been able to manage that through restructurings and in some cases some recoveries.
Well, delving further into your investments, let's start off with that acquisition of a 90% stake in Uganda's Orient Bank. Take us through how you plan to expand the bank's operations that are already in Uganda. How do you expect that acquisition to impact those operations and, of course, your bottom line going forward?
So Uganda has been a missing country within our East African footprint. So we're very pleased that as at 30th of April, the regulatory approvals were all through and the deal was signed with the exiting shareholders. Today, Orient Bank is number 12 on a number of measures. We have 14 branches, 22 ATMs, a full-time employee headcount of about 340 people. And a customer base of a little over 70,000. So it's a mid-sized bank, considerably smaller than our Kenyan operation. And looking forward, we've got high hopes to move that business to being a top 5 bank in Uganda. That's going to require considerable investment in technology. We're looking at not only important aspects such as cyber security. We're also looking at whether we put Orient Bank onto the same platform that we use across the rest of our footprint, because that then eases rollout of new solution technology that we're using already in Kenya, Rwanda and Tanzania. We're also working closely as a group because we really see the regional opportunity, whether that's at a corporate banking, whether that's at a SME level, or whether that's a retail level, as a huge opportunity. And we already have a number of accounts that have moved to us from other banks by virtue of our presence across East Africa. So today, contribution to our bottom line, very small. Looking forward, I'd like to think that Uganda will move to perhaps 5% of group's bottom line, 5% of the group's balance sheet within the next 5 years. It's a competitive market. It's an exciting market with a lot of opportunity. And we therefore are very pleased that we've been able to close the deal and start the process of integrating that business into I&M Group.
Well, you talked a little bit about this, but looking at your overall operations, you say you've made significant investments in new systems as well as plans to focus on a series of products and innovations across all segments of the business. So give us more insight into that and how much a digital strategy will drive this.
Okay, digital will drive a lot of it, but as a starting point, we've been investing heavily in the robustness of our infrastructure, the main core platforms that we use in cybersecurity and other supportive systems to ensuring that our clients are protected and that we are not subject to potential hacks and all of that. With that now substantially in place, obviously not in Uganda, as I said, but substantially in place with Rwanda, Tanzania, and Kenya, we are starting to roll out capability across the board. Probably the biggest win for us this year has been the launch of a significantly upgraded internet banking platform for our corporates, which in due course will be rolled out to our SME clients. And just last week, we announced to our personal banking customers that our new banking app is available for download and transferring across. So that's what I would call our relatively plain vanilla investments, but they all take time, money, and effort to get in place. And we are now pushing hard into partnerships with M&Os, with agency banking providers, and with other suppliers of lending, micro-lending, savings, micro-insurance. And indeed, today at the investors presentation, I mentioned WhatsApp banking, which is live in Rwanda and Tanzania and gaining some good momentum. We're hopeful CBK in Kenya will give us the required approvals so we can launch here too. We also have a linkage with an agency banking partner called SPEN, who have brought to the table, for example, in Rwanda, over 300,000 customers that we can add to our retail base there. And we're looking at some other developments along SME to marry into that platform. And then in Tanzania, we've got into partnership with Airtel and a company called Yabex to provide at the bottom end of the market small mobile loans. Again, not new, but really looking to experiment and work out how best to originate new retail business, which has not really been our focus to date. We're very keen to diversify our customer base, and on the top of that, we will do that through diversified solutions and services, primarily digitally provided, as I've described.
Well, speaking of micro-lending and small and medium enterprises, we know the bank will be receiving, or you have received, a $50 million long-term loan from the International Finance Corporation. Now, you say you plan to use it to expand lending to the small and medium-sized business sector. Give us a sense of how you plan to roll out that plan and where exactly.
So again, I mentioned this morning that our core plans have been launched in Rwanda initially, and that's off the back of the fact that we worked with IFC pre-pandemic days, so 2009, with them and some specialist advisors to build a better market knowledge of what's needed. And obviously pandemic postponed the launch. We then launched that earlier this year. And that's been growing very nicely, over 1,000 new customers in the last 6 months, and a real appetite to bring both loans and savings to the market. In Kenya, we already have a substantive customer base in the SME space of around 30,000 customers. Not all of those are as active as we'd like, probably because we've not really thought through their needs as well as we should do. And an exercise under the leadership of a new head of personal and business banking has been completed now. And in the coming weeks and months, we will start to roll out those solutions, some of which will then dip into the IFC lending that we've been provided. So it's still relatively early days, but we've got some rubber on the road in Rwanda, and we've got a clear game plan for Kenya and Tanzania. Uganda already has a reasonable customer base of SME, and they will benefit from the learnings in other countries as we scale and replicate across the